G'day guys, Seeney here and welcome to another episode on the Australian Wealth channel. And in this episode, we are going to be talking about whether Carnival stock is a buy in March 2021. So guys, before we get started, please make sure you like and subscribe to the channel. It really helps to get these videos out to more people. So I've got my trusty 0-cent iced water. A bit cheaper than 20-cent iced coffee, isn't it, Graham? Fantastic. So Carnival has seen a share price run up in recent weeks due to improving economic conditions, and also we've seen a little bit of rotation out of big tech. So what I'm going to do is I'm going to lay out some facts about Carnival, and then I'm going to give you my opinion on whether I believe the stock is a buy, a hold, or a sell at this point. So Carnival Cruise Lines is the largest cruising company in the world. They own Carnival, they own Cunard, Princess, Holland America, P&O, Seabourn, and a few other brands of cruise ships. So at this point, we've seen a fair bit of a run up in the market cap, which is the valuation of the company. So that is now at roughly $28.6 billion, which is up significantly from where it was earlier in this year. So earnings from November 2020 were $33 million in revenue for the quarter, which is down 99.31% year over year. So we can see that this business has been completely destroyed by the pandemic. And you know, if we were to see these conditions that Carnival has been in the last 12 months continue, then this would see the end of the company. It just would not be feasible. But I guess what you're betting on in the future is whether things are going to come back to normal. So we'll talk more about that a little bit later. So the net income for this last quarter was negative $2.22 billion and an EPS of negative $2.41 per share. So as we can see, the company has lost a lot of money this year, and that is absolutely understandable given the circumstances that the globe is in. In a normal year, a company like this, you would take one look at that and completely write them off and never look at them again. But of course, with a once in a 100-year event, maybe it's worth having a look and seeing if there's any deal going on there. So over the course of the last 12 months, Carnival's obviously had to raise money to keep itself afloat because it's not making any. So Carnival raised over $6 billion in debt to get the company through the global issue that's happening. However, the interest rate on this debt was really high. It was roughly 11%, which is huge. I'm sure they'll be able to reduce that as conditions get a little bit better. But this is, of course, a factor that you need to weigh up when you're looking at the cost of the share price and the market cap. Okay, so recently adding to this, they announced $1 billion in new stock offerings. So that is obviously going to cause some dilution of the share price. So the next metric that we can have a look at is the book value of the company. And what that is the company's assets relative to the market value of the equity. So market price per share is divided by the book value per share, and that gives you the ratio. So the book value for Carnival was 0.47 much earlier in the last 12 months, but now the book value is 1.2. So anything under 1 is normally considered a sound investment if the company is continuing to grow. So people are expecting Carnival to do better than just the assets that they are holding. Of course, the PE ratio at the moment is 0 because they have negative earnings due to the sweeping illness around the globe. In normal economic times, this hovers around 12 to 20. So, is Carnival a buy, a hold, or a sell? Now, this all has to be your decision. So, is Carnival a buy, a hold, or a sell? So this is a decision that's obviously entirely up to you because we don't know what is going to happen in the future. The decision is basically and solely related to external factors. Will travel restrictions end? Will they continue? Will we see a return to normal? I personally believe that we will. And what we've seen is there is still a lot of demand for cruise ships. You know, recently in the sector, Royal Caribbean has said that their bookings are coming in really strong. Carnival is getting the same thing. People really like cruising, and I don't think a pandemic is going to scare them away, especially as we're seeing the vaccines start to get rolled out, which is really exciting. So the future of Carnival stock rests solely on whether the economy can function as normal or somewhat normal in the future. One of the great things about cruise lines is that they have such a big moat. It's really difficult to just go and start up a new cruise company. There is so much capital outlay that needs to be involved there for that to happen. So they have a really strong moat, which I really like. So in normal economic times, the share price of Carnival has historically sat around $40 to $60 a share. Now, of course, this has changed a little bit due to increased debt and of course the dilution of shares. So that is something that you do need to factor in when you're looking at the valuation of Carnival. So personally, I think even with the recent run up, if you have a long-term outlook on Carnival, even at $27 a share, it's not a bad buy as the economy continues to improve and get back to normal. Because I definitely think we'll see a lot of people return to cruising. So I think that it's really important to weigh in the fact that they do have a lot of extra debt. And that is worth mentioning, but of course they did need to take that out to get through the current crisis. So I think over the next few years we can probably see Carnival rise to $35 a share. We might continue to see it get a little bit higher. So if you have a really long-term outlook and you're thinking that cruising is going to come back really strong over the next couple of years, then maybe it's something worth looking into. For myself, I'm currently up 50% on Carnival, even with buying before the pandemic, because I took such advantage of the reduced prices in March and April. So I think with a longer term outlook, perhaps it's buy. For myself, I'm going to be continuing to hold at this point and hopefully enjoying share price appreciation as I've built in my position. I think we will hopefully see a little bit of an increase, otherwise I'd be selling. But I think most of the big gains have probably happened by now. So thank you guys so much for watching. I'd be really keen to hear about your opinions and what you think about Carnival stock and the cruise sector in general. Carnival's not the only stock that I hold in the cruise sector. I also bought heavily into Royal Caribbean, where I'm up 77%. So it's been an even better increase over there. So please make sure you like and subscribe to the channel. It really helps to get these videos out to more people. So thank you guys so much for watching, and we'll see you later.